Hey guys, this is Market Update. Absolutely everything is set up for Bitcoin in my opinion, both in this bull market and for the longer term. So I'll go through some of that in this video. But one of the first things I ever learned when I started trading, the brokerage I started working for, I literally didn't know anything about trading. The guy that was obviously going to teach me taught me about moving averages, right? And so he would just say, look, put the moving average on, 50 period, 100 period, have a look at them, see what they're doing, see what the price is doing around that. We are bouncing off the 50 period moving average, this white line right here. See the previous bull market, we're above it, we come into it, bounce off it again, bounce off it again. That's a bull market, it's an uptrend, buyers are coming in, right? Any drawdown, buyers are coming in. Now we break down and then we reject off of it. That shows you that buying pressure is completely gone. The thing rejects down. Then we cross over it. Once you cross over that, you're thinking, buyers are coming in, they're pushing up, this is recovering, and then we bounce off it, we bounce off it, we bounce off it. It's a huge bull market, and we've just bounced off it again. So short term, this is a weekly chart, very, very good, right? You always get drawdowns, you always get pullbacks in Bitcoin, in stocks, in anything else. Always get that. I'll show you some data on that in a second. But it's very positive that we're trying to bounce off of it. Now we may bounce around a little bit, but it is pretty good news. That's on the weekly. Now, ultra short term on the daily chart, we still haven't quite broke out of this downtrend. So a little bit of caution. This is the RSI, right? And we are trying to break through. We're trying to make some sort of bottom. We actually tried to do that here. We got rejected again. So ultra short term, maybe wait for a breakout. We could project down off this. There's a lot of FUD around tariffs and everything like that. So ultra short term, if you are trying to go for a long trade, maybe you want to wait for a breakout. Maybe you take your risk here. Maybe you wait for a breakout. It's up to you. But look, longer term, bouncing off the 50 period is, it's pretty bullish, and there aren't really any signs that we're trying to break down through it and reject off of it. So technicals are pretty good. Anyway, if you trade, Bybit deposit bonus down below. If you deposit anything, they'll give you a bonus up to $30,000. If you can't trade on Bybit, check out Bybit's DEX, which is Apex, fee discount and deposit bonus on there. Just trade directly from your crypto wallet, log in, trade. Link below for that one as well. We bounced this week because the Fed are drawing down even more of their quantitative tightening, which is on the margin, good news for risk assets, right? People come and bid them up, essentially. The Fed was taking 50% of the oxygen out of the room, now they're only taking 10%. So you still don't quite have enough air, but it's better than it was before. And so risk assets on the margin will get bid up a little bit from that as people look forward and say, well, they're going to draw it down to neutral and not do any quantitative tightening. We don't really want stimulus. We want the economy to actually be strong. That's the positive scenario here. But all of this is noise. The tariffs, the cuts from Doge, on the other side, trying to sell golden visas to the States, all of that. That is noise, right? Because this is short-term policy, but the longer-term policy on Bitcoin and crypto and the fact that the currency debases, that's the signal. So I'll show you this here. Global M2, money supply around the world, making new all-time highs. Very positive for risk assets, especially Bitcoin. It has a very high correlation. Not in the short term over weeks, but over months and years. You can very, very clearly see that. This one here is the Fed funds rate. Again, I think it's just too high. Inflation may be a little bit higher than the 2% target over time, but 4.5% rates with the cuts from Doge potentially, I think we can get this down, right? And so over this year, maybe you can have a couple more cuts than are predicted. I think that's absolutely possible, especially if oil continues to be fairly weak. There's a lot of reasons why interest rates could definitely come down and actually be coming down quicker and faster or more than the market is currently pricing. I don't see how we can surprise to the upside and actually go up in rates now, because a lot of the policy now is to draw the inflation down, not create the inflation. Bitcoin funding rates, essentially leverage wiped out here. So pretty good news. We don't want too much leverage. If you're looking to buy short term, make some trades, and you want to time that, maybe wait for a breakout, of the downtrend here that we're in. But when leverage wipeout is actually pretty good news, and then you get kind of a real price for the asset. No retail euphoria. This is MVRV. When we get up to 4.5, 5, 6, a little bit overdone. But for right now, if you're investing, if you're actually accumulating the asset, it's a pretty decent time. There seems to be a lot of uncertainty in financial markets right now if you listen to traditional financial media. And it's the same old inflation and GDP, right? Which is just, I think it's just all noise, right? If you go back to Signal here, you've got money to invest. What are you going to invest in? 10-year time horizon, right? S&P, NASDAQ, House, Bitcoin, what you're going to have as a mix of those. Bitcoin has more growth than an MSCI World Index. It has more growth than the S&P 500. And it's now proliferating through the US Gov, who's setting positive policy that's going to proliferate through most of the rest of the world as well. These congressmen, Trump doesn't really know about crypto, right? He's just been told there's a massive groundswell of support. If you're positive, that's good for you, right? So it's not coming from the top, it's coming from the bottom up. And we have the power to say, hey, we want this thing, we want positive policy around this thing, and now that's happening. Bo Hines, Director of Digital Assets for the US government, says, we're going to acquire as much Bitcoin as we can possibly get. 10-year time horizon, that's the signal. Like, unbelievable. And 80,000 for Bitcoin, if the US starts accumulating, that's insane. Now, this is going to take a long time, but I think states can do it first. So states can do it, and then maybe much later it goes, to the federal government. But that's the signal, right? They're going to push for this, and even if we get half of what we expect, it's massively good news. Another interview on the All In Pod this week, very, very telling. This is Besant, the Treasury Secretary, who, I think it's about an hour-long interview. The main thing, when he was talking about, we need to cut government, we need to cut government spending, right? Cut government employment, and we need to re-leverage the private sector. So they're going to be deregulating, right, the banks. They're going to be trying to spur credit creation, which is all good news, I think, right? Private market, creating wealth. But the one thing out of all of that, all of the worry about Doge cutting spending and causing, GDP to come negative and inflation to come down, well, you want a little bit of inflation coming down, right? But the one thing he said, despite all of this cutting, these huge cuts that they're going to make, they just want to return the budget deficit, not even to 0%. They want a negative 3%. So they want a budget deficit. He actually says their actual policy is to create a budget deficit of 3% from 7% that it is now. They're not even trying to balance the budget. They just want to bring it back to a 3% deficit. Now, maybe on the other side of that, they can sell golden visas and whatever else, and maybe they can attract some more income from tariffs and pay down the debt. Maybe they can do that. But they don't even want to balance the budget. Their actual policy, even though all of this narrative around cuts, they still want a 3% deficit. So that's very telling. Howard Lutnick on the other side, he was telling a story with Doge, where they want to cut $1 trillion, but they also want to earn $1 trillion as well. So that's actually neutral, isn't it? Right? So they're not trying to cut money out of the system. They're not trying to collapse GDP. What they're trying to do is just balance things, which ultimately, if you take a 10-year view, is pretty positive. Because if you have a deleveraging of the government, who mostly spend in a profligate way, don't create productivity, and you move it over to the private sector, that's going to be very rocky in between. And you're going to have people that are opposed to that on the government side, forcing FUD through the traditional media over and over and over again, saying we're going to have a recession, etc., trying to derail that. But if it happens with rockiness in between, that's ultimately positive for everyone and Bitcoin, who can price in productivity gains. So it's going to be very rocky, but look, strap in. That's markets, that's volatile assets. You have to be in for that, have a 10-year view. And ultimately, most of these outcomes is positive for BTC. You either fail and you get more stimulus, which means currency debasement, or you win and you get more stimulus from the private sector, creating credit, creating wealth, creating productivity, which means you get an abundance of products and services, which Bitcoin can price in as well. So Bitcoin's a strong asset. Fundamentally, 10-year view, everything's set up. I know the big question is always, and the worry is that, are we going to go much lower? Is there going to be a big recession, right, and force prices way lower? But we've had the recession, right? China has price deflation. So they've had the recession, they've had all of that, and they're trying to stimulate out of it now. So they're at the bottom of that cycle, which is positive for risk assets. Europe would be in one if it wasn't for sky-high energy prices and the war pushing GDP higher. That'd be in one, they're stimulating out of it anyway. And then the US has been in one rolling, and it's only huge profligate spending, 7% budget deficits that have created positive GDP. And as they draw that down, markets become a bit soft. But the whole point they're drawing it down now is so that they can use soft data as fodder to say, cut taxes and deregulate. That's what they want. That's what they want. That's their policy goals. So they're going to use this soft data to do that later on down the line. I think that's ultimately positive in the medium and the longer term. So Goldman says buying S&P after 5% drops is usually profitable. We run the stats. Enters long 5% off 50-day highs. Exit within 3 months. 45 trades, 71% win rate. You buy dips in good assets and that's it. Uncertainty, as you can see, each and every one of these massive buying opportunity in markets, because we know what the policy is. Get soft data, cut taxes, deregulate. That's stimulus for the market. And we know Lutnick saying we're going to cut from the government side, but we have plans to stimulate all of that same amount from the private sector as well. You can't let the fiat Ponzi deflate. It's always going to have stimulus, whether it's from the government or the private sector. That is the aim of us and the government and the central bank is to have that stimulus. Wherever it comes from, it's going to come. And so buy great assets that price that in. The fiat currency is worthless. You can't hold it. If you trade any amount you deposit on Bybit, they'll give you a deposit bonus up to 30K. If you can't trade on Bybit, Apex is Bybit's DEX. Fee discount permanently and a deposit bonus on Apex as well via the link below in the description. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.